Leif Eskesen, he is Chief India and ASEAN Economist at HSBC, also in Singapore. Well, is a rate hike now a done deal, Leif?
Well, we think so, at least. I mean, we expect another 25 basis points today. I mean, the way we see it is, of course, RBI is concerned about the global economic backdrop. The domestic economy is slowing more notably now. It's also broadening the slowdown. But I think ultimately you're going to see inflation still as a dominant risk. Headline is very sticky. It's not coming off. Core inflation pressures are also still holding up. And importantly, inflation expectations are still trending up. So it's a very challenging outlook for the central bank there. But as I said, on balance, we still think that they would caution against on the inflation side and then hike another more.
Yeah, well, the thing is, I mean, what about inflation? I mean, how much does lifting the cost of borrowing really do anything when it's actually almost structurally embedded into the economic system of India?
No, you're absolutely right. I mean, you have a number of constraints on the supply side. I mean, you have, for example, lack of basic infrastructure. You have very rigid labor markets and product markets. These things prevent the supply side from growing as fast as you would hope. And then at the same time, the demand side is growing both because policies are quite supportive, but also because of the demographics that are supporting domestic demand and the rising middle class. So these factors definitely add both a cyclical and a structural element. But in the short term, you need to use demand management policies to stamp out the excess demand you effectively have in the economy, which is both cyclical and structural in nature. And then, of course, over the medium term, you need to get through.
Well, Leif, you know, that brings me on to, okay, we talked about monetary policy, but maybe a better way to deal with it would be if they did a bit more on the fiscal side.
Absolutely. I mean, fiscal policy should contribute more. And I think in particular on that front, there was a big disappointment last fiscal year that they didn't manage to claw back fiscal stimulus more than they did. There's going to be fiscal slippage this year as well. So we really need to start to see them step it up on the fiscal side to contribute to sort of, again, dampening demand-led inflation pressures in the economy. You're absolutely right. But in structural reforms over the medium term.
Has it surprised you, though, against all this, that the rupee's had a terrible time of it of late?
Not really. I mean, that also really reflects sort of the global backdrop, the risk-off environment. That's really weakening the currency. And, of course, there is also concern about the outlook for the economy because of the elevated level of inflation. That's an added risk in India's case.
Okay, so where do we go from here? What sort of level of inflation would they be comfortable with, where they can actually, ironically, start to cut rates? Perhaps they should cut rates anyway, and because it might be choking off growth more than actually hurting inflation, or well, bringing inflation to heel.
Yeah, I mean, I think any rate cuts are far into the future. I think at the earliest at the end of next calendar year, we could see a gradual easing in policy rates, but they have to be sure that core inflation is sort of slipping into the comfort zone, which is 4 to 5%. We don't see that happening until 2013. So that's why we don't see any cuts anytime soon. They have to keep these policy rates in contractionary territory for quite a while.
Leif, thanks so much for your time.